Hi guys, welcome back to the Business Block Podcast. Alongside me I've got Dale Kitchen. What's been going on, Dale?
How are we all? Glad to be back again. It's a good time. Back to Business Basics Podcast.
Building blocks and everything else.
That's the one, yeah. Yeah, it's been a while. It's been a good 2 weeks.
What have you been up to?
So it's well, we've had a couple of audits lately, which is probably the big thing about town. It's the amount of audit activity that's going on. So we were out at a client's this morning where they had a wages audit, a building industry, just going through cash, sort of seeing what's coming through, checking their contractors, that sort of thing.
Right. So the ATO is doing their job.
They seem to have ramped it up a lot. They also hit another builder of ours probably about 2 weeks ago, and they audited his GST because his gross profit was out of line with their analytics, so they just wanted to have a bit of a closer look. So yeah, audit activity for everyone. Fun.
Well, I'll always notice every budget they come out with, here's more $1 million going into the tax office's audit powers and facilities, and they're always expanding. But I think it's until recently a lot of our clients have avoided any issues.
Yeah, usually they only came in with a big GST refund. That's sort of the only place we ever had them previously. But they're just doing a lot more spot checks and not on big businesses as well. The one that they did last week he was pretty tiny. I think he was only doing about $300-400 a year. So, in the scheme of things, after he pays for materials and wages and everything else, he's not pulling a lot. And the one they did this morning, I can understand that one, but yeah, it is really crazy where they think that they can spend time to try and make money back. It was mind-boggling.
Well, maybe the next guest we look to get on the episode is an auditor from the tax office. Now you've become friends with quite a few.
I mean, it wasn't a scary experience, so I don't think that the people you deal with are sort of out to get you. It's just the mandate that they're trying to push through. So I think, I don't want to be pushing the barrow for the tax office, but they did it this morning in a way that was sort of pleasant for everyone and just got to the point. The other one wasn't so pleasant, so yeah. You get some good and you get some bad. But we can try. Let's give it a go. I'm happy. Shout out to Mr. Tax Office.
Get him coming along. So, yeah, and I think a lot of business owners really see the tax office as the big bad wolf and that they're really trying to avoid everything to have an audit because they think it's a huge process and that the tax office is out to get me. So they maybe then don't engage with an accountant or a bookkeeper as often because they don't want to open themselves up to it.
I think what they were looking at today was basically, do you have the procedures and structures in place that allow you to record everything properly? It didn't seem like the figures were that important. It was more about how they did things and, did you understand this? Do you know this? What about this? So it was a strange one. I mean, at the end of the day, yes, we have to lodge the figures. We have to get everything incorrect, but the conversation didn't really steer that way. So it was strange. Education
is probably the biggest part that the new software companies aren't really providing. They're offering education through their videos and resources, but they're pushing all this new accounting software as it's very simple to use. And frankly, there's several people that we've talked to that have just picked it up and said, I thought this was meant to be simple. Like I'm paying $50-80 a month. I thought it's just click a few buttons and your books are looked after. So I think there's a big sort of, misconception was probably the right word with zeros and mobs. And it's across the board with all the software that you do need to put the work in as a business owner and understand your financials before you can actually utilize the software.
Well, I don't think, and this is sort of something we came across today, I don't think MyOb has a automated tax file number declaration lodgement. So one of the issues that they brought up was that we hadn't lodged them, and the client said, I clicked on them in MyOb, so I thought the job was done, but they didn't get forwarded through to the ATO. So yeah, it's sort of, as with all the new software, the devil is always in the detail. They look flashy, they have a lot of beautiful numbers that balance perfectly, but getting down and getting good reports, good use out of a system seems to be lacking a lot in a lot of things, as we've come across a few times.
Certainly right. Well, let's take a step back, and what we're looking at today is actually setting up your business structure. So we're going to sort of go through pros and cons of the different business structures, and if you should be a sole trader or a company, or actually even open up a trust, and if it's beneficial to you. So if you want to start, Dale, by just running over what the basics are of each structure, and we'll sort of build on that.
I think we'll start with the premise that, this is not individual tailored advice. This is general advice for guidance only, and should seek the advice of a professional for your specific situation.
Yes, exactly.
In saying that, though, let's get to the point. So there are predominantly sort of, I would say, three major structures that are used to run a business, and that's sole trader, a trust, and a company. There is a partnership that is used very limitedly, and there's also a couple of variations around types of trusts you can set up. So to keep things simple and sort of, if you want the easy explanation, I'll start with that, and then we'll move on to the more technical. If you want the cheapest thing you can do, you can set up a sole trader. So sole trader is the cheapest thing to get running. It's the cheapest thing as far as accounting and bookkeeping is. The restrictions on how money can be paid in and out are a lot lighter, and it's a very, very good starting position for people. I think these days there's a tendency for people to jump straight into companies, which I totally disagree with. And I'm of the old school sort of thinking that you should be earning at least, I think, a minimum of about $200,000 before you start looking at a company or a trust. And that's based solely on the fact, well, it doesn't take into account the legality of separation of assets and you running of the business, which is a different issue, which means certain structures are set up to give you protections around assets. You don't get those protections with a sole trader, but it's like a learning playground. You can make a lot more mistakes, and there's a lot less serious ramifications if you're running a sole trader.
Now,
did I waffle too much?
No, that's a good explanation. Now, one question: at what point do I become just a little kick around at home business? Is there a revenue point where I need to start declaring my revenue, or if I can just run a little online company, earn 10, 20 grand? Is that, at what stage does it become a business?
So you can run a hobby business, and a hobby business is something that you run that you don't do with a business-like intent, meaning that you don't approach it on a day-to-day basis. You don't advertise a lot. You don't keep a lot of good records. You don't see this as a main sort of income. There's not that sort of structure about how it runs. So there's no staffing.
Yeah.
An example would be that, I like to sell books on a weekend. Books is probably... So I like to sell my own homemade jewellery on a weekend, and I make $3,000-$4,000 a year from it. I do it because I like it. I don't do it as a full-time thing. Now that's called a hobby business, where you don't need to declare that money. There's a few more rules I don't know off the top of my head, but that's sort of the general gist behind it. There can't be a profit-making intent behind it. It's more just I do it for the fun of it.
Yeah.
And the income amount I think is 10 to 20. I don't remember off.
Okay, that's something we can put in the show notes, the exact figure. And then the transition from hobby business to sole trader or to a company, you're obviously, all your hobby business is exempt. There's no backdating of income earned from the hobby side of things.
Yeah, I mean, also, if you're serious about starting a business, the deductions you get, from, just running around using your phone, using your house, usually eat up a lot of those really low $5,000 to $10,000 profits anyway. Yeah. So if people are just trying to hide that kind of money and not report it, I'd go down the opposite angle. You could probably, you probably got deductions that you don't realise, and you could declare that money and have everything above board, which is probably the better way to go. But if it truly is a hobby business and it truly is just something you do, maybe you code because you like it. Maybe you fix old cars. There's a bunch of things people just do for the love of it. They don't have to be legally declared. But seek professional advice before you don't declare any income.
Exactly right. And if I've got big dreams and I start a company, what sort of steps to go through that? Is there, you have to create directors, and how do I go about getting shareholders? Can I be the sole director or?
Structuring, all right. So when people shift into a company, everyone loves the idea of shifting into a company. The problems you've got with that, and I like to slow people down on it, is you're going to have expenses that are probably 3 to 4 times that of running a sole trader. And that's just with the compliance side of it. And that's a minimum. So it would be better if you're in the smaller, 100, 150,000 turnover range, that you took that money and you slammed it into either advertising or, some form of stock or buying stock or whatever you're going to do. So I always tell people, and people really don't listen. People love the idea of being a company owner, and I don't think there's a stigma around it these days. But start slow. Start with the sole trader. Build the company up. Wait for the company to... wait for the business to get to a stage where it needs to be a company. Then we can start looking at companies. So on the back of big dreams, no. Certain cases, yes. Sometimes people walk in and, that they have the capital, they have the know-how, and they have the clients. But I'm talking about a basic setup, which is sort of what the people we're talking to now, the people who are just sort of out there trying it and just sort of trying to make their way in business and trying to figure things out. Start with a sole trader. You just register an ABN. So you go down to the ABR website. You can register for an ABN. Did we cover that last podcast?
No, we haven't. We haven't got into the ABNs or business names.
Okay, so with every company, you're going to need an ABN. And so the ABN is the identifier that the ATO use that allow you to run a business. If you don't have one, you can't run any form of business. So that, with any type of business, is the first point of call. As you well know, we've had clients who've royally stuffed this up. It does seem like a pretty easy process, but personally, I'd get someone else to set it up. It doesn't cost a lot, and an accountant can set it up quite quick. But an ABN is a must. GST is then the second decision you need to make. Generally, is your turnover going to be over 75,000 in 1 year? If it is, then you have to register for GST. Now, if you don't think you're going to do that, you don't. But at the point that you do surpass the 75,000 in any year, you then have to register for GST. So, they're probably two of the basic things that you need to start up on. once registered for GST, there's a lot more reporting requirements. So, it's the same sort of adage that I say for everyone. Don't go into GST if you're very, very new to business. Just get an ABN, just get a business name, just run as a sole trader, learn how to run a business and what's required of you, how the advertising works, then start to look at all those extra problems that you're going to have. Because once again, if you add GST, you're going to probably increase your costing with bookkeepers, with accounting software, with accounting reviews. You're going to increase your cost again, and it stifles a lot of young businesses. I need to do everything straight away. So just think where you can best spend your money. If you can save $1,000 here and put it into advertising, in the beginning, that money is a lot more golden than if you're turning over $600,000-$700,000 or $1 million, and then that $1,000 is nothing. So grow slowly, learn it as you go. So learn up how to start the business. Am I going to do over 75? Yeah, it's a pretty easy mark to get to. All right, once you get to that, all right, let's learn about GST. Let's learn how that affects my accounting system. Maybe you were running Excel beforehand. Maybe you were using our free software beforehand. There's a bunch of different ways to get there.
Yeah, and just going back to your point of seeking assistance at the beginning, it's not pumping up accountants, not trying to sell our services or anything, but you want to create the foundation correctly. You don't want to make errors. It's going to cost more to go back and change documents or update documents that you've incorrectly submitted, and it's not worth the few $100s to not seek the assistance to get it set up correctly, and just lead some more headaches down the track.
I think it's hard to see the value in an accountant if your problem doesn't happen until 3 years later. And that problem, when it does come, a structural problem is never cheap. If you've set it up wrong and you haven't sought advice along the way, by the time you're 5 years in and selling this behemoth business, it's costing you hundreds of thousands of dollars. So if you did it, you started as a sole trader, you can then have a rollover into a company so you can reassess how your structure should look. You could probably do that 1 or 2 years in. There's a CGT rollover concessions, which is capital gain tax, meaning that you can shift assets from a sole trader into a company, into a trust with no tax trigger point, and reassess then. Really look at it, because when you start, and the business you're looking at when you start as opposed to 2 or 3 years in, your mindset changes.
Yeah, and you don't know who's come on board or if others have come along to join you on your journey.
Yeah, but even just what you think the business will be year one as opposed to what it is year two would be hugely different. Maybe you've had to seek funding. Maybe you've gone for seed funding. Maybe it's, all right, I'm going to build this up and sell parts of it off in 3 or 4 years. That means the structure needs to be different. If you start and set up a company, let's say someone goes and sets up their own company and they put 10 shares and they make themselves the director, which is probably the standard way of doing it. It's not a flexible way of setting up a company. It's not. It works. It works in 60 to 70% of all the vanilla cases. But once you get into the realms of starting to wanting to do things that are not sort of that basic, it doesn't work. And that's not even talking about trusts and trustees and properties and other things like that, which
so we can
people also make mistakes.
We can lightly touch on trust, but do you think it's in what percentage of business are you seeing that as a necessity from day dot, or is it more of a take it down the track a bit?
So what do you mean? So trust as a necessity?
Yeah. Trust as a business structure, is that further again more complex?
It is, yeah. So dealing with trustees, it's also more expensive. People do it for the flexibility about distribution of income, which means in a trust you can transfer money to a nucleus of family members generally, without the need for explanation, just based on how the trust is set up. If you're a small business and your income is, or your profit is under 100,000, there's not a huge need for what would you say? So a great selection of people to distribute the income to, because the tax difference isn't huge. So you can give that to one person as the sole trader, and it doesn't sort of change things a lot. So yeah, you can keep it simple. Trusts, I would say, should be coming in about your $400,000 turnover mark, and that generally is when the profit sort of starts to get used in a trust structure, unless there's a lot of assets involved. If there's a lot of assets involved, you've got to take that on a case-by-case basis. But generally, I'm earning 100 grand, I'm a sole trader. I'm earning 50 grand, I'm a sole trader with no GST. I get to 200 grand, all right, let's look at it. Let's go speak to the accountant. Let's see what they think. Let's set out our 3 to 4 year plan and sort of say to them, all right, this is where we're heading. What structure do we need? It's a much more logical approach. And in that time, in those first 2 years when you've run as a sole trader, you've saved thousands of dollars in accounting fees and bookkeeping fees, because you don't need to keep such stringent reports, because the money is all yours. Whereas if it's in a trust or a company, every dollar in and every dollar out has to be recorded. Every dollar out is either a loan, a wage, or an expense. Every dollar in is either a loan or income. A sole trader doesn't work that way. It's a lot more flexible. So play it slow. Yeah, everyone play it slow.
Yes, exactly. So summary of that is sole trader up to around 100, 200,000, and then look to expand to the companies, and then further down the track, maybe a trust. Maybe that's where the trust really advisement on your situation is paramount.
Yeah, and I mean, everything comes in consideration when you're starting to look at structures. So it is, and I mean, I don't say it that jokingly in that you've really got to seek advice, because depending on your age, depending on your assets, depending on what you have personally that you need to protect, depending on what your ambition is for business, depending on what your income is, these structures could change. All of them could change. Depending if you've got multiple entities and you want to transfer money between the two, that all that stuff changes how you set things up. And just seek advice. It does make a difference. It really does.
And and if we just want to go a couple of what we've seen, the mistakes we've certainly seen, we've had one customer opting to save a few dollars, choosing to create a partnership with his work colleagues, and then instead of creating a company has been there's a perfect example of not seeking advice and choosing the partnership because it's cheaper than a company, and then it's causing headaches down the track from an accounting point of view.
So the one thing about partnerships, there is one good thing about partnerships. It's the only structure where you can distribute losses from. So if I had a partnership, and we never covered off partnerships. So touching on partnerships are such a scary concept, is why nobody uses them. There are more technical partnerships that you can use, which is a partnership of companies or a partnership of trusts, where two companies or two trusts get together to set up a partnership. Joint ventures, which we won't even worry about. But what that means is that one company joins another company and sets up a third entity, which is the partnership. And in that partnership, they put the assets in, they jointly work together and distribute the money. Now, the benefit of a partnership both with a company and individually, is that let's say I run the partnership and let's say it's making staplers. I lose $400,000 in my first year. So each partner, saying there's only 2 partners, can draw out $200,000 each. And they can take that loss, that $200,000 loss, and offset it against the other income in their own returns. The downside of partnerships is partnerships are unlimited liability for debts raised in the partnership. And what that means is that if I have a partner and he has a push-on, is that what it is? Anyway, he enjoys buying Ferraris. He can buy the Ferrari in the name of the partnership, and each partner is personally liable for that Ferrari. So if he buys 15 Ferraris and then says, well, listen, I like to burn Ferraris now, and he burns them all, you're personally liable in that the person, you as an individual, is personally liable for all the liabilities of the partnership. So for that reason, people stay away from it. Now, if you have a partnership of companies, the companies mean, so the partnership and the liability is pushed out down to the companies and stops at the companies, because a company is a limited liability scheme, meaning that your only liability to a company is the amount of shares that you buy. So if it's $10 worth of shares and you've paid that $10 at the beginning, that's the limit to the liability.
Okay.
Provided you haven't breached ASIC rules, but now we're getting too complicated. So leave it at that.
Certainly leave it at that level. The limited liability of a company versus you're wide open in a partnership, and it comes back to being careful with friends going to business. That can quickly evaporate, or you can have a really good partnership and just be aware with who you're going into battle with.
Yeah, partnerships are a really scary thing. I've got 2, maybe 3 partnerships that we have individual to individual. We have a bit more company or trust partnerships, but I just advise stay away from them. They're too scary. I mean, when you start a business with somebody, their life is going to change over the next sort of 5 to 10 years. So even though everyone's happy at the beginning, everyone's in a good position, everyone's mentally well, a lot of people, everyone goes through issues in their life. Everyone has problems, and those problems you will be personally liable for if they raise those problems in the partnership. So for that reason, I suggest everyone to stay right away from them.
Yeah, certainly. And there's many structures where you can work closely together but still be separated enough that it is you're personally responsible for you alone and not the actions of others.
Yeah. So, and there are different types of trust you can set up as well. There are, it's sort of, there is a lot you can do. Not touching on super funds, which is sort of another thing, which I don't know if we can talk about anymore.
No, we'll leave super funds for another day.
Yeah.
We've sort of a lot of meat in this episode. And one of the things that...
Yeah, true. What are we in? Jesus Christ, half an hour. Yeah, okay.
One of the things that listening back to the episodes and taking feedback from people that have listened is that we're not providing any information on where to get in touch with us. If you've got a question for Dale regarding the structure of your business...
Story of my life, mate. That's how I work. I'm the phantom of the internet.
So you just give out the content and then no one can find you. It's...
Exactly. The Scarlet Pumpernickel. So
yes, Tax for You Melbourne across all the social media platforms. You can find us. And what's your email address, Dale?
info@taxforyou, TAX 4u.com.au.
That SMS style business.
What's it?
SMS, the Tax for You, shortening it out from the using the number 4.
Oh. Well, it's what the kids want these days.
So we've got through this relatively mundane section of building a business. So what have we got on next week's episode?
Yeah, it's really hard. like, it's such a complex area, and I just say to everyone, just go. So I'll premise it again. I'll repeat. Just keep it simple. If you're earning little, don't go for a company. You don't need it. If you start to get up there, then go speak to someone. Use the money that you're earning to go pay for advice. That's all I'd say. All right, next week, let's go on. Move on.
Okay, so now we've got the structure down pat. So just to recap, we've gone over, you've got your idea. We went through a business plan, getting in the right mindset of what it takes to start your own business and be a business owner. And today we looked at the company structures. So then what's this next step? Do we get into the customers?
Next week, so what have we done? We covered off on the basics. I mean, we briefly touched on GST and tax file numbers. That's another thing you're going to need. So when you register for an ABN, you also register for a tax file number. Then that's that. I just think we should start looking at the basics behind what you should be thinking about. I think that's probably the next step, and where your mind should be, and sort of the basic, I premise it with basic structure about, the sort of, what do we call business blocks? The blocks in the business. There we go. Boom. That you should be looking at, and there's the issues with setting up on wages, which is probably another area you can come off. There's an issue of setting up with...
We haven't got any cash flow or any sales or anything.
All right, so okay.
How are we getting staff if we've got nothing in the door?
All right, we're thinking big, mate. We're going all out. All right, let's go with... We will start with advertising.
Okay.
Let's start with the basics behind advertising.
And what you can get for nothing.
And I think...
And then...
Yeah, and then where you can look and how you can sort of troll people or troll around and try and get work. The sort of the main ways you can do it. That'll probably knock out a half hour. Yeah. I mean, the problem is I couldn't have got through... I barely touched anything in half an hour. So... It's a real struggle to try and get these things out well enough that sort of people get a general understanding of it. And yeah, I can only do what I can. But yeah, I think that's a basic understanding, and I think the premise is this is really just an introduction to everything. And if you were really serious and really didn't have any idea, go seek advice. I'll just say that again.
And certainly, if anyone hits us up, mentions Business Block Podcast, Dale will be more than happy to help you and give plenty of free advice to assist you with setting things up. Yeah. Because that's what we're really trying to do. We can't go across every situation over half an hour, 45 minutes. It's not possible, and everyone's tailored to have their own setup. So,
yeah. I mean, as long as I'm not getting 100 calls a day, I generally spend probably about an hour every day talking to someone new about, all right, I'm getting new into business. I really don't have an idea of what's going on. So I'm happy to chat to people about, just putting their toe in the water and sort of pointing them in the right direction. It's hard. And I don't want to do it as an ongoing thing because I charge for my time, but I understand that people are sort of they're very hesitant to sort of to go to someone for advice. But we can cut your growing time down hugely. I had someone call me. What was it? Was it Monday or Tuesday? Monday or Tuesday, looking to build a childcare centre. I helped him out with sort of the planning process, who you can talk to, what steps to go through. And that sort of half an hour to an hour conversation, which is what I give people, it really puts them on the path. But, how much can you really cover in an hour? Everything is an ongoing thing, and everyone should be working as we go to sort of, just to grow things. So a 1 hour conversation isn't going to fix all your problems, but it will give you some comfort about what direction you should head in. So that I'm pretty happy to give.
Certainly. And no doubt, any time spent with a professional, if it's accountant or bookkeeper or even legal side of things, they're going to save you so much money. It's
a proper professional, though. I mean, there is a lot of rubbish out there. I mean,
true.
We pride ourselves on like, I can give this information away because this is not where I want to be spending my time. This is the pre-information that I'd like to give to people so we can get to the good stuff. So, but you could go to a lot of accounts and this is as good as it gets. I mean, and that's not blowing our own horns. We've just spent a long time focusing on getting better. Many years ago, this was good for us. This was great advice, but it's really the first baby steps in a really, really steep learning curve if you really want to get good at business. So yeah, and that's why we created the podcast.
Yeah, exactly. Just to get it out, to give it another source and get you off the phone and answering my emails.
Yeah, I'd love to. Yeah, so I'd love for people to sort of, go through the podcast, sort of say, oh yeah, cool, and then sort of get a feel for the ideas, to then bring more specific questions to what we do. I mean, that's the dream. It really is. For more information, go to our website at www.taxforyou.com.au or shoot us an email on information@taxforyou. Oh yeah.